Well, the debasement trades, the expressions, this big macro thematic is back in vogue and it's building. We're going to the next stage now, which is the flow dynamics that are taking place. We're aware of the impending or changing, evolving macro story around that, which is driving that. But really what happened, if we take gold as a proxy, we can see, we built this base around 4,000 for a period of time. There was a strong platform. There was good accumulation below 4,000 and also in futures. And that was really driven by the idea that central banks, China specifically, were starting to hoover up and increase once again the gold as a percentage of their reserves on their balance sheet. And, we saw a nice platform, but then it changed. Well, it was very much a rate story. Oil was moving and that changed the perception of bonds and rates and bits and pieces, but now it's turned into the debasement. So what is debasement? What are we driving it? Well, it's just a situation where we're seeing a clear deterioration of the US fiscal position. Now, we just saw the recent fiscal numbers coming out, and we've seen the fiscal deficit as a percentage of GDP coming in at 6% of GDP. Now, that was at 5.1% earlier this year. So we are seeing deterioration, and the market has taken notice of that. A lot of that has down, as Weston would say, down to the idea that some of these tariffs are being pushed back into businesses, and that's having a deteriorating effect. But also spending has increased, and it will continue to increase into the midterms and past that point. I mean, Trump's just pushed this proposed budget for defence for FY27, $1.5 trillion. He's asked for $100 billion to fund the US-Iran conflict situation. That's got to go through congressional approval, but we are seeing a deterioration in that. Now, what we've also seen is long-end US Treasury yields going up to about 5.3%, and 10 years moving up as well. And the Treasury Department see that as a sign of the market's voting mechanism on the perception of the US fiscal position. So he's come out with these buybacks. He's doubled the size around the allotments for various auctions that come up, but he's going to be potentially using to fund these through the Treasury General Account, which could increase reserves, and the market will see that as very, very, very quantitative light. We'll have to see if new money's coming through. But gold prices have moved up very, very sharply. You can see, we built this base around 4,000. We break through 4,430 odd, and we just continue to make these higher highs. Bitcoin has pushed up into 80,000 as well. Altcoins have gone really, really strong. How much further can this go? This is not now a rate story. This is a momentum trade where we're seeing ETF inflows coming through. CTA's chasing this one. Can it kick? Clients certainly think that's the case. And trade at Pepperstone.